Friends, let me look at the section. Section 224(2) says what? Section 224(2) of the Companies Act 1956 provides that a retiring auditor shall be reappointed at any general meeting, at an annual general body meeting, subjected to the provisions of section 224(1)(b) and 224(a). According to section 224(2), a retiring auditor cannot be appointed under the following circumstances. First, if the auditor is disqualified for reappointment, already I explained. Then, if he has given to the company a notice in writing that he is not willing to take up the reappointment, or similarly, if a resolution has been passed at the AGM appointing somebody instead of the retiring auditor, or else even if somebody is not appointed, in that annual general body meeting it is specifically stated by way of a resolution that the retiring auditor shall not be reappointed. Either somebody getting appointed or express resolution that he should not be reappointed. This also is a situation when reappointment should not be made. Where the notice has been given by any member of intended resolution to appoint some other person in the place of the retiring auditor, and by the reason of the death or incapacity or disqualification of the person, the intended resolution cannot be proceeded with. Somebody gave the notice, but due to death or incapacity or disqualification, that resolution could not be passed. Even under that circumstances, you cannot go for the reappointment of the retiring auditors. Then, seventh question, how can a casual vacancy of an auditor be filled up? First, try to understand what is a casual vacancy. Under the Companies Act, casual vacancy nowhere got defined. That is, casual vacancy has not been defined in the Companies Act. It stands for a vacancy created by an auditor ceasing to act after he is being validly appointed and the appointment was accepted. This may arise due to variety of reasons like death, resignation, disqualification, dissolution of the firm, etc. What exactly this is? Let us suppose I am being appointed as an auditor of a company. I accepted this. I accepted this particular appointment. I accepted this particular appointment. Subsequently, what happened? Subsequently, what happened is that some circumstances forced me to take a loan. Consequently, what happened? It attracted the disqualification. Once it attracted the disqualification means that I should automatically said to have vacated that particular post. Like that, you can have the point of the casual vacancy. So, what are the situations when the casual vacancy arises? I explained the point of disqualification is one of the causes for creation of a casual vacancy. After being formally appointed and accepting the appointment, a person may get disqualified, or death of such person may happen, or the other situation is what? The firm of chartered accountants might got dissolved, went into dissolution and all. These are all the probable reasons for the creation of the casual vacancy. But nowhere in the law it is being defined what is a casual vacancy. These are the circumstances which again warrants a person to be. So this is a situation where the casual vacancy gets created. Now the question is, once the casual vacancy gets created, how it gets filled up? How it gets filled up? This casual vacancy, first you are trying to make the two parts. What are the two parts? Part number 1 is casual vacancy created because of the resignation by the auditor. Second, other than the resignation of the existing auditors. Other than resignation, death could be one situation, dissolution of the firm could be one situation, getting attracted to some disqualification is the another situation. So what we are saying is, other than resignation situation, the casual vacancy gets filled by whom? By the board of directors. So by now you are clear. When board of directors can appoint the auditors? One is first auditors will be appointed by the board of directors. Second is a casual vacancy other than the one which got created by the resignation of the existing auditor. In these two circumstances, board will make the appointment of the auditors is the point. And in case of a resignation of the existing auditor, what will happen? Again, company in the general body meeting should pass the appropriate resolution and make the filling up of the vacancy, casual vacancy costs. So, other than resignation, it is the members. Other than the resignation, it is the board of directors. And because of the resignation of the existing auditor, appointment need to be made means what? It is the shareholders in the annual general body meeting. Friends, I think you are able to find the logic in it. Because what is the logic here? Resignation means what? Something might have happened. Board might have done something. Auditor might have found something. There is a clash, conflict and all that made him to resign. Now because he has resigned, we will allow the board to appoint the casual vacancy created by the resignation. What will happen? In every company there will be a problem. How come? Shareholders will appoint in the annual general body meeting an auditor, and board will not cooperate with that particular auditor, and will create a situation where he has to resign and भाग जाना उन्हों, बाद में इन्हों उनका पहचान वाले को अपॉइंट कर देते. सच्चे पॉसिबिलिटी रहता बोल के कंपनीज एक्ट क्या बताए? In case if the casual vacancy is caused by the resignation of the existing auditor, such casual vacancy can be only filled by the shareholders in the annual general body meeting, other than the resignation, death, or what you call disqualification or dissolution of the firm of chartered accountants. In all that situation, casual vacancy can be filled by the board of directors. So when you study any legal provision, to the extent possible, not that in all situations it is possible for us to find out the logic behind our purposive intent. Of course, purposive intent will be known as you progress in your life as a professional. In any case, a professional should always understand a purposive intent. In any situation, when we are dealing in relations, dealing with human beings, unless we are capable of understanding the purposive intents, as a human beings we cannot grow. Forget about growing as a professionals. So that is where the success depends. That you should, to the extent possible, understand the purposive intent of the law. This is only a small example I gave. So point you should remember forever in your life, that is casual vacancy caused by the resignation cannot be filled up by the board, it should be filled up necessarily by the what you call shareholders. Then friends, period of holding of the office. The auditor who got appointed in the place of the auditor whose office got vacated because of the casual vacancy concept and all, he will be from the date of appointment to the conclusion of the next AGM, he will be holding that particular office as an auditor. Does refusal to accept constitute a casual vacancy? Try to understand, because how you look at the casual vacancy is the one which we term as a casual vacancy is after being appointed and after being formally accepting, if the casual vacancy got created because of the death or dissolution or disqualification or the retirement, such you call it as a casual vacancy. But somebody appointed Chakravarti has not accepted that appointment. That immediately cannot be termed as casual vacancy. Chakravarti accepted it and subsequently became disqualified or subsequently resigned, then the casual vacancy gets created. So what is the point? When the auditor appointed to fill up the casual vacancy refuses to accept, the appointment is not complete and effective, it shall be deemed that casual vacancy continues and has not been filled up. Yes, when one auditor is there, he resigned, it created a casual vacancy and they appointed somebody else as an auditor, that somebody else has not accepted. That means what? This is not an appointment itself, and that original casual vacancy continues. But not that again one more casual vacancy got created is not the point. Because casual vacancy very clearly we have defined what? That is, casual vacancy has not been defined anywhere in the Companies Act. It stands for the vacancy created by the auditor ceasing to act after he was validly appointed and the appointment was accepted. So in that scenario, what we are saying, that is not accepting the position do not create any casual vacancy, but in the casual vacancy position, if an auditor is appointed and he has not accepted, means that original casual vacancy shall be deemed to be continued is the point. Then write a short note on appointment of the auditor by the central government in case of auditor is not appointed in the AGM is the point. See, under what circumstances central government may appoint the auditors? Now in this situation, try to understand. See, normally auditors will be appointed in the AGM is what we studied so far. Section 224(3) of the Act provides that where at the AGM no auditors are appointed or reappointed, then the central government may appoint a person to fill up the vacancy. So at the annual general body meeting, if the auditors are not appointed, then the central government can appoint. Under section 224(4), a company which could not appoint an auditor in its general body meeting shall intimate that particular fact that we could not appoint the auditors to whom? To the central government within what time? Within 7 days. So under section 222(4), company shall give a notice of the fact within 7 days to the central government of its power becoming exercisable. And then if the company fails to give such notice, company and every officer who is responsible shall be deemed to be in a what you call a default, and they shall be punishable with a fine which may be extended to ₹5,000. Then where the company is required to appoint an auditor at AGM by passing special resolution. Friends, I am going to explain you under what circumstances for appointment of an auditor special resolution is required. And under those circumstances where auditors should be appointed only by special resolution, if the company fails to pass that special resolution, then also it shall not be considered as appointment, formal appointment. So what is the point? where a company is required to appoint an auditor at AGM by passing special resolution, but omits or fails to pass such resolution due to any reason, then it shall be deemed that no auditor has been appointed by the company at its AGM, and thereupon the provisions of section 224(3) of the Act will get attracted. So, where the company could not appoint a particular chartered accountant as an auditor, then the central government will get right. Or where in some cases where special resolution is required for appointment of the auditor and the company could not pass on that special resolution, then also auditors should be appointed by the central government only. Now, the question is there before you. Under what circumstances auditor's appointment should be ratified by a special resolution? Should be completed by a special resolution. For that, what we are saying, according to section 224A of the Companies Act, it requires that company to appoint an auditor only by passing the special resolution, where 25% or more of its subscribed capital is held by the government or its institutions. So, the point here is, in case in this particular company 25% of the share capital is held by the government or institutions owned by the government, if they happens to be the shareholders holding 25%, then for such companies where government holding is 25%, necessarily auditor's appointment need to be carried out by the special resolution. Similarly, the appointment or reappointment of an auditor shall be made by a special resolution if not less than 25% of the subscribed capital is held either singly or by any combinations mentioned therein. Not only that, only when 25% is held by the government or institutions owned by the government, but even if partly by the government, partly by other institutions whom we are prescribing, then also a special resolution is required. Why a special resolution? Public interest is involved here. Government money is being invested here means. So, a public financial institution, a government company or the central government or any state government or any financial or other institution which is established by any provincial or the state act in which a state government holds not less than 51% of the subscribed share capital, a nationalized bank, an insurance company carrying on the general insurance business, if any one of these either singly or jointly holds in any company 25% of their share capital, then such company where the investors happen to be these people and their holding either jointly or singly happens to be 25%, then such companies need to appoint their auditors by special resolution. What is the relevant date for applicability of this section? For determining 25% holding, the material date shall be the date of AGM. As on the date of the AGM, if the percentage of holding happens to be 25%, then special resolution is required for appointment of the auditor. And in case where the holding is less than 25% on the date of notice for the general body meeting and exceeds 25% as on the date of AGM, it is advisable for the company to adjourn the meeting and issue another notice to the members and make the appointment of the auditors only by a special resolution. So, we are so carefully drafting the provisions here. As on the date of issue of the notice, the holding of those institutions is less than 25%, but by the time of the particular meeting, the period of holding, the percentage of the holding is more than 25%, then we advise you to postpone that particular meeting, adjourn that particular meeting and then call for another meeting and necessarily to see to that you pass a special resolution. But in any case, what is the relevant date for this 25%? Date of AGM is the point. Then what are the consequences of failure to pass a special resolution? Where special resolution is to be passed and if it is not made, already we studied. That is, the vacancy still remains and the central government will be empowered to appoint the auditors in that case, and it is the bounded duty on the part of the company to inform the same to the, intimate the same to the government within 7 days. And then friends, write a short notes on the appointment of the auditors of a government company. So the point here is, what do you mean by government company? Section 617 says that a government company means a company in which not less than 51% of the paid up share capital is held either by the central government or by the state government, or partly by the central government and partly by one or more of the state government. In all these situations, what will happen? Such a company is said to be a government company. Then it includes a company which is a subsidiary of the government company. Even a subsidiary of a government company shall be treated as a government company, is the point to be noted. Then appointment, section 619. So the auditor of a government company shall be appointed or reappointed by the Controller and Auditor General of India, CAG. That's what. Every 2 years we will make application for empanelment with the CAG and Controller and Auditor General. CAG means what? Controller and Auditor General. Controller and Auditor General will make the appointment of the auditors of the government companies. So section 619B, companies. The aforesaid provisions also applies to the companies specified under section 619B of the Act, even though they are not the government companies. The companies specified under section 619 are any company in which not less than 51% of the paid up share capital is held by one or more of the following or any combination of the same. That is, there the combination is what? Either by the central government or by the state government, or one or more state governments, or one or more government companies, like that the combination. So the combination list I am not studying, but the whole lot of objective is, if in any company 51% of the shareholding is held by any of these combinations, what is stated is necessarily the auditor gets appointed by the CAG, Controller and Auditor General, because they are said to be government companies. Then 11th question is, write a short notes on a ceiling on the number of company audits. Friends, try to understand. Ceiling on number of audits. Why that ceiling should be? Before we get into subject proper, let me explain why the ceiling should happen. See, audit is not overnight exercise. It requires what? Lot of careful observation before one express their opinion. So naturally, Companies Act thought it fit that better we prescribe some ceiling on the number of audits. Otherwise, quality of the audit work will get suffered. Quality of the audit work will get suffered. That made to fix up the ceiling on the company audits. Of course, company's audit and the ceiling, law is kind enough to exclude private limited companies from the purview of this particular ceiling. But however, our chartered accountants regulations says what? Even the private limited company should also be considered. As such, Companies Act excludes what? Private limited companies from this ceiling of what you call this 20 audits. So let us have a look at it. That is restriction on appointment under section 224 1B. No company or its board of director shall appoint or reappoint any person or a firm as its auditors if such person is in full-time employment elsewhere, or such person or a firm holds office of the auditor of the specified number of companies or more than specified number of companies. So try to understand, a company cannot appoint an officer or the employee of that company as the auditor. This is very clear with us. Or one more thing is, only company can appoint a person who holds the certificate of practice, which is a full-time certificate of practice. If that person is in full-time employment elsewhere, then such person will only be able to hold the part-time certificate of practice, and those who are holding part-time certificate of practice cannot sign the balance sheets and the audit reports. So the point here is, such a person is in full-time employment elsewhere, or such a person or a firm holds the office of the auditor of the specified number of companies or more than the specified number of companies. And then in the case of the firm of auditor, specified number of companies means the number of companies specified for every partner of the firm who is not in a full-time employment elsewhere. So this, let us suppose our firm has got 6 partners full-time. 6 into 20, 120. Audit, we can carry it out. So this limit which is prescribed is for not from the firm's point of view, from the individual partner's point of view. And that partner also is the one who is holding certificate of practice which is full-time. That means he is not into full-time employment anywhere else. Then ceiling limit. The ceiling limit is 20 company audits per person. Of this 20, not more than 10 shall be in respect of the companies having paid up capital of 25 lakhs or more. So that is also another, within that limit of 20, not more than 10 should be what you call companies with paid up capital of 25 lakhs or more. In case of individual chartered accountants or proprietary firm, ceiling limit shall be 20 company audits. In case of the partnership firms, the ceiling limit shall be 20 company audits per partner who is not in full-time employment elsewhere. In case if the firm has got 5 partners, the overall ceiling limit is 100 company audits, of which not more than 50 should be companies with having a paid up capital of 25 lakhs or more is the point. Then friends, the next issue after the ceiling limit, where the chartered accountant is a partner or is a partner in a number of firms, then all the firms in which he is a partner or a proprietor together are entitled only for 20 audits. Let us suppose if I am the partner in 2 to 3 firms, it's not that each individual firm will get again 20 more. All the audit assignments which I have, that means I have to intimate to each firm how many company audits I am taking under the other firm, then total 20 minus company audits I am doing for the other firm should be reduced, only balance will come to this particular firm. Where a partner of the firm also holds the office in his individual capacity, the total number of company audits shall not exceed 20 in his individual capacity and all firms taken together. I am doing the practice in my individual name as well as I am the partner in another firm. Put together in that situation also, it cannot exceed a 20 is the point. Computation of ceiling limit. Following audits are not counted in computing the ceiling limit. What is it? Audit of a private limited company, audit of a guarantee company. Generally companies are companies limited with a limited liability. There are companies which got limited by guarantee given by the shareholders. Of course, once we open the Companies Act, you will be knowing what is a company with a limited liability, company with a liability to the extent of the guaranteed amount. So an audit of a guaranteed company, an audit of a foreign company, a branch audit, these things need to not be considered in that particular ceiling limit. Similarly, audit of cooperative societies or trusts or corporations, because these are not companies as per the Companies Act, and tax audits under the Income Tax Act, that has got nothing to do with this ceiling limit, and special audits and investigations under section 224, and audit of liquidators accounts of statement, these things should not be counted for the purpose of fixing up that particular ceiling limit of 20. So, Companies Act says like that, but what we are saying here, following audits are counted while computing the ceiling. Let us suppose you are the joint auditor or a part auditor of a company, even that part audit or also joint audit also will be considered as a one full audit for you. Let us suppose myself, Chakravarti and Company is one firm and Aditya and Company another firm, both are the joint auditors. Although it is only one audit, in his account one will go, in my count also one will get reduced. And section 25 companies, non-profit companies would also be included for the purpose of this particular ceiling. ICAI notification. What ICAI says? ICAI has issued a notification which specifically restricts the number of audits to be handled by the members to 30, including the audit of the private limited companies. So this restriction is intended to uphold the principles of fairness and provide equitable opportunities to all practicing members. So this 30 audits limit is prescribed by the ICAI for what purpose? To see that there is an equitable opportunities for all practicing members. Other way around, let us suppose somebody started the firm 30 years back, means he has got 150 audits. Unless he is kind enough to share those audits with the new members, junior members, then how the profession will get developed? Isn't it or not? So that is the reason why this limit. Or other way around, let us suppose there is a partnership firm. If there is no limit, what will happen? The senior partner only will be signing all the 150 audits or 200 audits. So, because of two reasons it happens. Like the juniors don't want to take the responsibility by signing the balance sheet, or the senior don't want to hand over his authority. So to see that there is a principle of fairness and provide equal opportunities to all practicing members, ICAI says that there is a limit of audits which a chartered accountant can handle, that is 30. Although this limit is not prescribed by the Companies Act, that the Companies Act excludes the private limited companies, and so many exclusions we have studied. But ICAI is not excluding all these things. ICAI says that even partnership for even the private limited company audit also will come under the ceiling limit of this 30. So this 30 ceiling limit is with reference to the ICAI, whereas under the Companies Act that limit of 20 is prescribed excluding the private limited companies audits and so many other situations. But there in the Companies Act, the within which limitation is what? That out of these 20 also, companies whose paid up share capital is 25 lakhs or more, such companies should not exceed 10 for each. Then friends, the 12th question, write about the remuneration to the auditor. See, what are the provisions of the Companies Act 1956 with regard to the remuneration and the disclosure part in the company's profit and loss account. Friends, for the purpose of section 224(8), any sum paid by the company in respect of the auditor's expense shall be deemed to be included within the expression of the remuneration. Whether you take it as a fees or reimbursement of expenses, it comes or falls under the remuneration. So out of pocket expenses of the auditor shall be included in the remuneration unless a resolution fixing the remuneration specifically provides that such expenses shall be paid separately. Unless there is a specific resolution to that effect that such expenses should be paid separately, other way around, all that will be included in the auditor's remuneration. Remuneration for other services is also permissible. Once I am an auditor, maybe I may be rendering other services, the other services are also, remuneration for other services are also permissible, like consultancy fees, tax audit fees. So, extra remuneration can be paid to the auditor for other services rendered. For example, consultancy fees and tax audit fees No sanction of the shareholder is required for making such a payment. No specific approval of the shareholder is required for such a extra payment. Of course, you may, already student is laughing. That means, is there a chance of influencing the auditor with this extra remuneration and all? That is not the issue. Here we are discussing only on what point, not only as an auditor, for other services rendered by the auditor, he can very well be remunerated. That does not require any sanction by the shareholder. Fixing up of the remuneration. Who will fix up the remuneration? Who appointed will fix up the remuneration. That board, if it appoints, board will fix up. Board will fix up, board when it will appoint first auditors and the casual vacancy other than the one which is caused by the resignation of the auditor. By the central government, when central government makes the appointment. When the central government will appoint, when the company cannot appoint the auditor in the AGM, or where it is a what you call a government company where the auditors will be appointed by the controller and auditor general and all. And then by the company in the general meeting or in such manner as the company in the general body meeting may determine. So including those cases wherein the auditors is appointed by the C&AG of India under section 619. Very good. So this point you should be very clear that if auditors are being appointed by the CAG also, who will fix up the remuneration? It is not the CAG or government. It is the general body meeting, the shareholders only will fix up the remuneration. So this is definitely a point that should go into your minds. So for this purpose, the expression remuneration shall include any sums paid by the company in respect of the auditor's expenses. So the point here is remuneration includes out of pocket expense unless and otherwise a resolution to the effect that they shall not form the part of the remuneration. Then disclosure requirements, schedule 6 of the part 2 clause 4b. We have a schedule 6 in the Companies Act which will give you the pro forma and the disclosure requirements of the balance sheet and profit and loss account and all. There the schedule 6 requirement is that remuneration to the auditor should be split into what? As an auditor, how much you are paying. For other services, how much you are paying. For taxation matters, company law matters, for management service matters, how much is paid. And in any other matter, how much you are paying. Like this, clear split should be there and it should be shown like that, so that user of the financial statement will be able to properly understand how much the auditor is getting for doing the audit and rendering the other services. Friends, we will do with the 13th question. How may the company auditor be removed on expiry of his term and before the expiry of his term? See, removal of an auditor is also a legal procedure. How appointment is a legal procedure, even the removal is also a legal procedure. So what we are going to look at is the whole lot of this legal procedure. First, section 225 lays down the procedure for the removal of the auditor on the expiry of his term of office. First, respectable exit we will think of, and then forceful exit we can discuss. What is the respectable exit? That is, after the expiry of the term, if he is not reappointed means what? It is a what you call a respectable removal after the expiry of the term. So section 225 lays down the procedure for the removal of the auditor on the expiry of his term of office. Special notice. First, a special notice is required for a resolution at AGM for appointing as auditor a person other than the retiring auditor, and second thing is for providing expressly that the retiring auditor shall not be appointed. So first point is notice is to be given to the company stating that retiring auditor should not be appointed or somebody else need to be appointed. A member who wanted to see that the retiring auditor should not be appointed should clearly send a notice stating that I am not interested in this auditor to be reappointed, or I am interested that so and so need to be appointed. To this extent, a special notice is required for a resolution to be passed at an AGM. Then the next point is, what is the time before which this notice should come to the company? When the annual general body meeting is decided, 14 days before, a member need to give this particular notice to the company. So the concerned member shall give to the company a special notice about his intention to move a resolution to this effect at the ensuing AGM at least 14 days before such a meeting. Then circulation of that notice. After the company receives that notice, what it need to do? It should circulate that particular notice to all the members. On receipt of such notice, company shall forthwith send a copy thereof to whom? To the retiring auditor as well as the members of the company. And a special notice is to be sent to all the members of the company at least 7 days before the date of AGM. So here what is 14 days, what is 7 days? For the member to give the notice to the company 14 days before the AGM. Having received such a notice, such circulation of that notice to the other members and the retiring auditor, the company should do it within what you call 7 days or just before 7 days before the, at least 7 days before the date of the AGM. Then retiring auditor's rights. What are the retiring auditor's rights? Of course, retiring auditor can make a representation, of course, of a reasonable length to the company and requesting that such a representation also gets circulated among the members. He can also require that representation to be read out at the AGM. He has also got a right to be heard at AGM. Try to understand. Once somebody sends a notice that a retiring auditor should not be reappointed, Companies Act, how beautifully they have laid down that the retiring auditor also got certain rights. He can very well what you call ask the company to take his representation. Of course, his representation should not again become a book. Reasonable length में उन्होंने एक letter लिख सकते company को. Ask the company to circulate that letter among the members. And if required, he may also ask the company to read out that particular letter at the AGM, and he can also request for company to make necessary arrangement to see that he makes a oral representation. But in any case, friends, this is only a thing which is prescribed by the law to see that the members gets proper information from the retiring auditor, but not to see that retiring auditor makes use of this opportunity for throwing mud on somebody. Because as a professionals, all of us should remember one thing. We should never be in such a place where people feel that we are no longer required. Because we should create value additions. When we feel we cannot create value additions to the system, we should quit. Or when the system says that you are not in a position to create the value addition, also respectably you are supposed to quit. The most important thing that one should remember. Forget about the law. Forget about the law for some time. But in any situation, what is most important thing is an exit interview or an exit situation, because we are living in a country, democratic country. An opportunity of being heard should be given, is there as a principle of natural justice. So even the Companies Act says what? The retiring auditor has got a right to give the representation to the company of a reasonable length, and he can ask the company to circulate that particular letter among the members, and he may also ask the company to make arrangements for reading out of that representation. Also he may be also request for a right to be heard orally at the AGM. He has got a right. Company duty, where the retiring auditor makes a representation in writing to the members of the company, company shall, unless the representation is received too late, that is, tomorrow is the meeting, today is the representation received, means in one day they cannot make all arrangements for circulation of the same. But within reasonable time it is received, means naturally they can they should make all the arrangements for its circulation. And then friends, if they cannot do it because of late receipt of this representation, they should state the fact that the representation is being made in any notice of the resolution given to the members of the company. So the fact that retiring auditor has given the representation should be intimated to the members is the point. Send a copy of representation to every member of the company to whom the notice of the meeting is sent. Of course, when representation need not be circulated, when the representation need not be circulated, that is if it is received too late, or the company law board is satisfied that the right of representation is being misused by the auditor to secure needless publicity for defamatory matter on application made by the company or by any other aggrieved person. That's what we are saying is, never you should make use of this right to defame somebody or mud throwing on somebody, and unnecessary publicity catching mechanism should not happen. If the company or any member feels that it is happening, they can always ask for the intervention of the company law board, and they can take the permission from the company law board and see to that it need not be circulated among the members. Then procedure at the AGM. At the AGM what should happen? A copy of the representation, if it is not sent, as the same was received too late because of the company's default or because of the company's default, the auditor may require the representation shall be read out at the meeting. He also has got a right to be heard orally at the AGM. And at the AGM, if the special resolution is required in terms of section 224A, the same should be duly passed for his not being reappointed or for his removal. Certificate from appointed auditor. Before any appointment or reappointment of auditor is made at the annual general body meeting, a written certificate is to be obtained from the auditor who is proposed to be appointed. Otherwise क्या होता, इनको निकाल रहे और जिनको आप प्रपोज कर रहे as to be appointed as an auditor, उन्हों कल के दिन acceptance नहीं दिए तो कंपनी को प्रॉब्लम आ जाएगा. इसलिए as a procedure what we are saying, we are asking the company to get a certificate from the proposed auditor. Yes, if appointed properly, I will take up the appointment, and my appointment of this company in any way does not create a situation that the number of audits I am holding is exceeding the ceiling limit. ऐसा बोल के एक certificate लेना पड़ता. So the point here is, before any appointment or reappointment of the auditor is made at the annual general body meeting, a written certificate is to be obtained from the auditor proposed to be appointed that his appointment will be in accordance with the limits specified in the section 224(1)(b). It's not a question of acceptance also. It's a simple question of, please ensure that fellow's overall limit is not exceeding the said limit. Otherwise the whole lot of procedure becomes waste. Then removal before the expiry of the term of office. So what we have concluded is the removal after the expiry of the term of office. It is a respectable exit, as already I told. Only procedure that need to be followed to sum up the things. What is it? A member should send a notice at least 14 days before, and such a notice should be circulated by the company within 7 days, and a representation can be well given by the retiring auditor, and the same need to be circulated, or if it is received too late, it should be either read or the auditor has got a right to be heard also, and a resolution to the effect need to be passed, and before all that the company has to take a certificate from the proposed auditor that his overall limit is not exceeding. Like that procedure is prescribed. Now, before the expiry of the term, in case if auditor is to be removed, what should happen? Of course, removal of the first auditors, how it should happen, and removal of existing auditor other than the first auditor, how it is to happen, what is the procedure. Of course, to some extent the procedure continues to be the same. Already we explained the point that first auditors can be appointed by the directors, and the auditors appointed by the directors can be well removed by the members before the expiry of their term. So the point here is, which provision? Removal of the first auditor, the provision is 224(5), whereas removal of the existing auditor other than the first auditor, the applicable provision is section 224(7). Who has got the authority empowered to remove? Company in a general body meeting. In both the cases, company in general body meeting can has got a authority to remove. Then, of course, if it is a case of removal of the first auditor, right is given by the Companies Act itself to the members in the AGM, in the general body meeting, they can remove it without any prior approval of the central government. Whereas other than first auditor, in any situation, if the existing auditor is to be removed before the expiry of his term, a specific approval is required from the central government. And then procedure, obtain the nomination of the new auditor by any member of the company, and of course obtain a previous approval of the central government. That is, naturally once first auditors are to be removed and somebody else need to be appointed, that one of the members should tell who is to be appointed. So obtain a nomination of the new auditor by any member of the company, whereas for removal of the existing auditor, what should happen? Company should obtain an approval of the central government. And then what should happen? That is, in case of removal of the first auditors, a special notice should be given by the member 14 days before the meeting, and see, a special notice of at least 14 days to all members, and also the notice should be given to the existing auditor intimating the proposed change. There what is stated, in case of removal of existing auditor, send the intimation of proposal of change to the auditor and to the members is the point. And here of course days are prescribed for this. And then if the member's nomination for a new auditor is accepted, a resolution to this effect should be passed in case of removal of the first auditors. Whereas for removal of the existing auditor, what should happen? Properly you should convene the meeting, and all the procedure which is prescribed for appointment of the auditor under section 225(2) and 225(3) need to be clearly be adhered with. And proper resolution is to be passed for appointing the new auditors in the general body meeting. So the next point is, company may remove the auditors before the expiry of the term after following the aforesaid procedure, and the above provisions are equally applicable to a resolution to remove the first auditors or any of them appointed by the directors under section 224(5), removal of auditors of any auditors before the expiry of the term. So basically the difference between removal of the auditors, either appointed by either they are first auditor or the existing auditor. What is the precise difference that I am noticing there is, prior approval is not required in case of the first auditors. Prior approval of the central government is not required in case of the first auditors, whereas prior approval is required in case of the what you call existing auditor. That is the basic difference. But in any case, notice is to be sent to all the members as well as the existing auditors, and formally all the procedure which is prescribed for the appointment need to be strictly be adhered is the point. Please, the question. Right. Under the Companies Act, removal of the first auditor, the power is only given to the what you call the shareholders only. Right. Appointment only we have given to them, that too also only for 30 days from the date of incorporation. But removal in any situation has to happen with the what you call members in the annual general body meeting only. Right. Now I move to the most famous question from the examination point of view. What are the powers of auditors of a company? What are the powers of the auditors of a company? The powers of the auditors of a company are derived from the rights granted to him by the law. Companies Act 1956 confers certain rights to the auditor so as to enable him to perform his duty and reporting to the members of the company on financial statements examined by him. See, all these rights and powers, please try to understand, are given to the auditors for what purpose? Because they have to express their opinion on the financial statements, and they should report to the shareholders about the trueness and fairness of the financial statements. And in order to carry out their what you call duties, all these powers are given. Because the next question that we have is the duties. So under the Companies Act, what are all the powers we have? And as a future auditors, you should know what powers you have once you are being appointed as an auditor. First, right to access the books and vouchers. Yes. No company or its management or its employees should say that you can only look at this book or this voucher. You have an unrestricted right to access any books and the vouchers. So, section 227(1) of the Act provides that auditor of a company shall have a right to access at all times the books and accounts and vouchers of the company, whether kept at the head office of the company or elsewhere. So, whether the books are there in the head office or at the branch office, equally they can have an access of it. Books of accounts include what? Books which have got bearing or likely to have bearing on the accounts. Whether these are usual financial books or statutory or statistical books or memoranda of books. Voucher will include any correspondence which may in any way serve to vouch for the accuracy of the accounts. Then friends, right to access at all times means what? That is during the business hours. All times means I will go at 12 o'clock, they have to allow me to access, that is not the point. So the right to access at all times implies that an auditor can inspect the books of accounts and vouchers usually during the normal working hours of the business of the client while holding the office of an auditor. So the first right given under the Companies Act is right to have an access to the books and the vouchers. And then the second right is right to obtain the information and explanations. So the company auditor is entitled to require from the officers of the company such information as the auditor may think necessary for performance of his duties.